Thanks for your company for the weekly wrap this Friday, the 28th of August. I'm Jessica Amir, market analyst with Bill Direct. Well, reporting season made its final dash this week. 35 companies released results ahead of the season wrapping up Monday next week. Most results beat or met expectations. Tech stocks shone the brightest. Better than expected economic news, construction and private spending data also boosted sentiment. As a result, trading levels spiked to their highest levels in 9 weeks, and the ASX 200 tested out a new 2-month high. But with damp and disappointing report cards from utilities and energy stocks, the market lost a touch of shine, but the ASX 200 managed to hang on to a weekly gain of 0.3% as at close of trade Thursday. Of the 35 companies that reported this week, 15 beat market expectations, and they included the likes of Adelaide Brighton, AMA, Afterpay, Cleanaway Waste Management, Impedimed, Jumbo, MoneyMe, Perseus Mining, ReadyTech, Reece, Seven Group, Whisper and Worley Parsons. Now, of those, Afterpay shares soared 16% to a new record high. Rubbish business Cleanaway Waste Management shares cleaned up 14% to a 12-year high, seeing them both take a top spot on the ASX 200 performers table. But if you step back and looked at all the companies that outperformed, a common theme is tech, with innovative companies bringing home the bacon. You can see cloud CRM business Whisper in the mix as it delivered much stronger revenue and earnings. You've got Afterpay, APT, seeing online customers double in a year, with customers rising 21,000 from April to June alone. Online gambling company Jumbo reporting elevated customer spending levels, and ReadyTech, the online student management company, saw stronger earnings and subscribers than the market expected. Now, if you move to the 14 companies this week delivering results in line with analyst expectations, known as consensus, they included Accent, Cardno, Eagers Automotive, Flexi Group, Frontier Digital Ventures, National Storage REIT, Platinum, Polynovo, Regis, Spark New Zealand, Steadfast and Western Areas. Now, looking at the 6 companies that disappointed, they included Bravura Home Consortium, Japara Healthcare, Lovisa and Whitehaven Coal. Of those, Whitehaven Coal fell 27%, dragging its shares to a 4-year low, seeing it book a seat at the worst weekly performers table. While Bravura BVS fell 17% this week, and Australia's biggest gas and electricity company APA fell 6%, both of their biggest falls since COVID-19 emerged. So how does this fit into the big picture? Well, of the 237 companies that reported so far, the overwhelming majority, 44%, have been in line with market expectations. 38% nicely surprised, 17% didn't deliver the goods. The market is continuing to navigate the uncertainty caused by COVID. However, the structural shifts formed of how we're now living our lives has unveiled some excellent investing opportunities. Now, moving to what to watch next week, companies reporting include organic baby and goat milk business Bubs Australia. They report on Monday. The market's expecting a 4.9 million loss. Bubs is a City and Bell Potter rated speculative hold stock with a $1 target. On the same day, Cooper Energy reports results. The market's expecting a 5.5 million loss. COE is a City hold stock with a 45-cent price target. Companies that are going ex-dividend next week include on Monday ANN, AWC, Bingo and Fortescue Metals. On Tuesday, AEF, SDF, SUL, Wednesday, AMC, IRE, TWE, and on Thursday, ALU, BHP and PPT. So what do you need to know about these? Well, with interest rates so low, investors are looking for income in the share market. But keep in mind, if you are moving money from other asset classes, like from your cash in your bank account and putting it into shares, this carries risk. So take care when adjusting your investment portfolio and always ensure that you're not moving away from your longer term goals. Always remember, set a goal, set a time frame, keep your costs low and diversify. So what else to watch next week? Well, on the economic side of things, the RBA meets on Tuesday. Rates expected to remain on hold at 0.25%, and economic data, or GDP, is out for the second quarter of 2020 on Wednesday. Remember, first quarter GDP fell 0.3%, but Q2 is tipped to be the darkest yet, spelling out how COVID-19 halted economic activity from April to June. Now, some estimates are that GDP will fall 8%, but the RBA forecasts GDP to slide 6%, cities expecting a fall of 6.5%. Most of the pain likely to come from services and construction, which was impacted by lockdowns. But think about what the world's peak economic body, the OECD, is predicting for our peers. Well, they're predicting GDP to fall by 22% in the UK in Q2 and by 10% in the US. So Australia looks like it's in much better shape. On behalf of everyone here at Bell Direct, have a happy and safe weekend. I'm Jessica Amir. Look forward to seeing you next week.